All right, we are live with another Quick Tip Tuesday, each and every Tuesday, 8 p.m. Eastern Time. Today's topic is USDA loans. So a lot of people aren't aware of this. This is possibly the lowest percent down. Of course, there's certain criteria you need to meet. VA is not the only loan that allows 0% down. You can also get a USDA loan for 0% down, which is pretty amazing. The main thing to remember is you have to be in a rural area. So there's a website to see if the address, the city, the area qualifies for it. But for the most part, it's not near urban cities, not near major population, more of the rural areas. Actually, most of the United States, if you look at the map, falls under USDA guideline. So that's pretty amazing. So let's start off with credit score. Typically, it's a pretty good credit scores. The lowest, I believe, is a 640. The lowest. So it's kind of similar to FHA, very close to FHA. Rates are very similar to FHA. Of course, with 0% down, you would have mortgage insurance, of course. But the mortgage insurance is actually cheaper on the USDA side. It's cheaper on the USDA side than the FHA. So the upfront mortgage insurance is lower, and the monthly mortgage insurance is actually lower. The only way to remove that mortgage insurance, just like FHA, is basically to refinance into a conventional loan once you have the equity. So something to definitely keep in mind. USDA definitely it offers it to people buying their second house, so you don't actually have to be a first time home buyer. So you can actually own a home before and still qualify for USDA loan. I think one is the limit. I'm not sure if they're allowed to have more, so that's something to keep in mind. The ratios for USDA are very tight, so they're whatever you qualify for an FHA loan will be higher. If you qualify for a conventional loan, will be lower, and USDA loan will be even lower. So that's something to keep in mind. Another big thing for USDA loans is you have to your household income, whoever's going to actually live in the property, or your current household. Yeah, I believe it's your current household or who's going to live in the property. However they distinguish that, it has to be under a certain amount. So that's something to keep in mind. So if you're married to people, if you have very good income, it may be tough depending on the area, but that's a quick search you can do. I believe you have to be 80% of the median income of the area, or it's a formula that they use. And if you have kids, so that actually helps you. It decreases your combined income. So there's a website that I can share. If you're looking to get a USDA loan, you definitely have to meet that income criteria. So something to get an idea, 30% of your upfront income, your total income, 30% of that can be for your mortgage max. It's 29% actually. And the back end ratio, which is basically the mortgage and the all of your debts, will be about 41%. So that's very tight guidelines, but it's still a 0% down home. If you do qualify it, if you ever qualify it, if the household income qualify it, it's a great loan, aggressive rates, very low mortgage insurance. Let's see, what else do we have? So one thing to keep in mind is if you do have the 20% down in your bank accounts, because you got to provide all your bank accounts, you would not qualify for the USDA loan. So that's something to keep in mind. This is more directed for people that actually need it, don't have the down payment, don't qualify for a conventional loan. But if you do have that in non-liquid assets, let's say a 401k, that is not counted. So it has to be a non-liquid asset. So 401k, you can have money in 401k, it can be the 20%, but you still can qualify for the loan. So if you have a USDA loan, you can do like a refi or streamline to bring down the rate. So it has very similar criteria than an FHA loan, but this is for a only for a single family home. You cannot buy a multi-family home with a USDA loan. Something to keep in mind. USDA loans, primary home, no investments, 0% down. It can be your second home, but it has to be your primary home. Very, very tight debt to income ratios, tighter than the other loans. Probably one of the most tightest out of all of the loans. Once your file is ready, it will be, after the underwriter reviews it, it will be sent over to the USDA loan, and then they'll give it the final approval. So if you do qualify for it, if you're looking for a home, let's say more in the burbs, more out of the city life, rural area, you have close to the medium income, if you want a link to calculate to see if you do qualify on income base, let me know. I can share that link. It's a great loan if you qualify, of course. So that's it for this week's Quick Tip Tuesday. USDA loans, use it if you can. If you can't, let's tuck you into another loan that's best for you. All right, have a good rest of your day.